treat. This is what we look forward to every Friday. Every week, we come together as a team and we put our thoughts down on paper and see what we can do about, highlighting the best opportunities of the week so that we can all make some money. Yeah, that's the whole point here, right? Um, Colin, I
Yes, sir.
really want to talk about the narrative around the halving,
It's
and
coming.
so that's what I wrote about this week. And so let's take a look. Let's pop right in.
Let's do it.
All right, all right, all right.
I'll keep putting into the chat for everybody. So we can get the link.
Awesome.
There we go.
Hey, so the halving is near. It's so close. What are we calling? 8 days away, I think. 7?
Yeah,
Isn't it?
it's coming up.
Isn't it going to be
Yep.
on the 19th?
About 7, about a week.
Yeah.
Yep.
Yeah. So I think that this little image right here is pretty appropriate. I am really looking forward to what's going to happen post halving. We're all looking forward to that. So what is the halving? Well, the halving is when the block reward is cut by 50%. So that effectively cuts the inflation rate of Bitcoin by 50%. And in the past, in 2012, 2016, 2020, there were significant rallies after the halving, like really significant. But this cycle, we have these spot Bitcoin ETFs. And what they're doing is they're providing a new bid. There's a new marginal buyer. And all of these institutions, what they do is they build out these cookie cutter portfolios that they then sell to all different types of institutions all around the world. So when we're talking about BlackRock, right, they sell different types of portfolios. And now they have this Bitcoin ETF, and they can include this ETF in their portfolios that they can sell to institutional clients globally. So now all of a sudden, there is a massive amount of money that is going to be seeking a home in these Bitcoin ETFs. And something else to keep in mind is many institutional investors are viewing Bitcoin as a non-correlated asset. And so what does that mean? Well, it means that traditional markets, think the S&P 500 or the NASDAQ or maybe the bond markets, they're correlated to one another. But many institutional investors view Bitcoin as being non-correlated. And what that means is they can allocate, 1 to 5%. Many of them have regulations about how much must be allocated to specific asset classes. And now that crypto and Bitcoin is this brand new and growing asset class that institutions have access to now, they can allocate a couple of percent to these ETFs and actually reduce their risk because it's non-correlated while increasing their risk-adjusted returns. So this is a no-brainer for these institutions. And so what we need to keep our eyes on now is GBTC. So yesterday, only 18 million in outflows, its smallest day ever of outflows since January 10th, when these ETFs launched. GBTC has been a net seller the entire time. And what they've done is that they started with 600,000 Bitcoin on January 10th. And their Bitcoin stack has been cut by more than 50%. And who's buying? Well, BlackRock is buying, and so is Fidelity, and so is ARK, and so is the handful of other spot ETFs are buying up everything that GBTC is selling. But this selling can't continue forever. And I think that many people don't really understand how inelastic the supply is of Bitcoin, such that there is no other marginal seller. So when GBTC stops selling, well, then that's when we could potentially see a sharp move higher in the price of Bitcoin. And, I just keep watching a couple of different charts each week because I'm looking for that moment where you really start to see things take off and move up into the right in a big way. So I'm looking for 80K BTC by May 1st. That's what I'm looking forward to. And, take a look at BlackRock's on-chain holdings. Even with, things kind of consolidating below those all-time highs at 73.5. You know, Bitcoin holdings for the BlackRock ETF have continued to move higher. They're still buying. Very interesting. And now notice these patterns. This is important. I'm always looking for the similar patterns that repeat that can give us an edge. Because if you can spot these patterns and you know how they're likely to complete, well, then maybe you can give yourself a little bit of an edge against the rest of the market. And this type of triangle pattern, I'm looking to see this complete and move higher and pop out of the top of this little resistance here. This is on Bitcoin. Now, I'm not just watching Bitcoin though. I'm also watching dominance. And this for me is a good proxy for the state of the altcoin market. As we see Bitcoin dominance move higher, that means that, in my opinion anyway, liquidity is moving into Bitcoin and out of alts. So I'm looking to see this move up towards 57%. That's what I'm looking forward to on Bitcoin dominance. And why is that so important to track? Well, when we see Bitcoin dominance move in the opposite direction and start to break down, that's when we know that alt season has really begun. So as soon as you start to see dominance move sharply lower, then that's when we're going to start to see many of our favorite alts run 10, 20, 50x. So I'm tracking this closely. I'm also tracking outperforming assets on a weekly basis. Very important to know which are the market leaders. And AERO has been a market leader on the base chain. So ever since that investment announcement by Coinbase back at the end of February, beginning of March, AERO, which is the largest native DEX on the base chain, AERO has just been on a tear. And while we were writing this report, AERO popped like another 25%. So you're trying to get a snapshot of the price, but it keeps moving higher. And notice these patterns. So AERO has flagged off several times and moved higher. So here, that's a little bit of a flag. It doesn't look too good though. This to me is a flag. Pops higher, another little flag pops higher. So that's called flagging higher. That's what that looks like to me in AERO. Now, BNB, notice how similar the pattern is in BNB to BTC. Very similar looking pattern, right? Well, BNB has been one of the relative outperformers, at the top of the pile here in terms of market cap. So really interested to provide liquidity in BNB, because if BNB is outperforming and you're providing liquidity in BNB, well, then the value of your LP is more likely to increase. And that's what we're looking for, as well as, elevated yields with the volumes. So now I want to talk about some of the more speculative small cap assets on base that have been performing just so well on Aerodrome, on XtraFi, and even in their concentrated liquidity pools on Uniswap. And the first one is Grandbase. So this is a very, very small and speculative RWA play, real world asset play on base. They have this little protocol where you can get exposure to Amazon or Google or Microsoft or Apple stock on chain. It's a tokenized way to get exposure to real world assets. Pretty interesting stuff. And GB Wrapped ETH has been just producing killer yields on Aerodrome, on XtraFi. So this pattern to me looks pretty good. And you'll notice that the patterns of these small cap assets that we're going to look at here, they look similar. Well, Virtual's broken out. So Virtual is like an AI agent play on base. And they have this product that they're referring to as virtuals. And they're basically like specific use case AI agents, or AIs that you can interact with using like an AR headset, like Apple's Vision Pro. So pretty cool idea here. And the last one is Ethless, with their token on base Wrapped Ethless. And this is a GameFi and security play. Very interesting team behind Wrapped Ethless, with backing from Sequoia and Coinbase. So these guys, if they continue to build something interesting, then these are very, very small though. Ethless, Virtuals, Grandbase, these are all 30 million and under. So these are tiny microcap assets, but they've been performing so well. So they're worth mentioning here, I think. Now, let's take a look at the top 3 best pools for next week. We want to be able to project out and say, hey,